Oh, well, let's talk to Mukhtar Mohammed. He's already standing by to review market figures for me today. Investment analyst and stockbroker, Mr. Mukhtar Mohammed. Well, it's good to see you, Mr. Mohammed. How are you today?
Thank you so much. I'm great, Tulu. How are you doing?
Very well. Well, after the rebasing, I think I'm better with the figures we've seen. How would you react to that before we look at market, which is doing positively today?
I'm not a fan of rebasing because rebasing does not put money in our table. Rebasing have not brought our exchange rate down. Rebasing have not reduced the cost of food items in the market. Rebasing is all just about putting some sectors that are productive to the economy, but they have not turned out to be productive to the pockets and the lives of every Nigerian. So things are all the same. The inflation has not gone down by 10% in any of those goods that the price were high. If you look at even the data from MBS, food inflation is still high, transportation is still high, house rent is still high. So for me, the rebasing is only good for investors if you want to attract investors into a particular sector, and then investors will begin to look at that sector in the long run. Maybe that sector will create jobs, and that sector also will bring a lot of effects to the economy. But in the short term, what we've seen in this rebasing is it's not going to bring food on the table of the average Nigerian. But all the same, rebasing is meant to happen. It should have happened. It should be done after every five years because of new areas that have come into the economy. So for that, I think it's okay. But when you talk about rebasing to the ordinary Nigerian in the streets, that has not helped them. That has not helped their pocket yet.
Before you hit on the market figures, I would follow up to ask you that you know that the MPC meeting has started today, and as much as we've talked about it, the rebasing, I'm also worried about the price of goods and services and looking at the percentage that we have now. But many will still say that that might shape the impact or the outcome of that meeting this February. Do you think along that line?
Yes, I think so. How is it going to check the impact is what I don't know. But all I know is that with recent happenings, if you look at the budget, what is going to be put into the system in terms of liquidity that will come into the system, you will favor a rate hike, which is not good for the SME, the productive sector, and smaller businesses in Nigeria, even bigger business. Also not very comfortable for the bank because we have the non-performing loans goes up when people are not able to pay for the loan. So when you look at that, you won't think anything will be different. But again, with the rebasing, you could say, okay, they could be different. They could say, okay, inflation has come down by 10%. Yeah. So we'll maintain rate and we see how we'll bring price stability. And the CBN knows that price stability as it stands today is largely driven by exchange rate volatility. And thank God the exchange rate is moving in a corridor of stability between 1,500, 1,600. Hopefully, they will get it to that 1,400 budget benchmark, and then we would have been able to address inflation. Then we'll begin to see how we begin to stop the hawkish nature maybe, and we go into that place whereby we see cost of funding go down.
Well, market is green today, positive 0.87%. It looks like it's looking pretty well. Yesterday was also in green, I guess. What's your overview of the performance as we expect the outcome of MPC meeting, the first for the year? It's significant. I know you agree with me that it is. Whatever comes out of that meeting tomorrow will make real sense.
Yeah, Tolu, whatever comes out from that meeting will make real sense. If you're in the stock market, it doesn't make any difference. It has been priced in. We are used to the rate hike, whatever it's happened has been priced into the stock market. If the rates are high, the stock market will still benefit. If the rates are low, if we have maintained the status quo, the stock market will still benefit from it. So it's not so much of what happens in the market, because when you look at other investment instruments like fixed income space, you know the return is not commensurate with what you are getting in the market in the area of dividend yield or capital appreciation. So it's not so much going to be a challenge for the market. But again, the major challenge for the market will actually come in if those results that will come in from those companies are not able to meet market expectation. Any moment from now, between the end of February and the beginning of March, we expect those numbers to begin to come in, especially from the financial sector, which you and I know are the key drivers of the market indices. So I think the inflationary pressure, MPC, are already priced into some of these stocks, especially the financial stocks. You could see that they have been suffering from the past 2 days, and the industrial goods and other sectors have been gaining. But hopefully, there will be a recovery when the MPC meetings finish. I don't expect anything so drastic from the MPC meeting. And again, the banks, especially the banks, have performed well. The insurance sectors also have performed well with the result that we have seen thus far. So there may not be any so much difference in the equity market when this MPC meeting meet, but it could be a trigger to better things to happen in the microeconomic space, especially for the consumer goods companies and the industrial companies. What will happen in the MPC will determine what direction those sectors will drive in, especially those that are listed in the Nigerian Stock Exchange, and especially those that are also FX driven. So we'll see what the policy from the MPC will help in impacting their bottom line positively going forward.
I must thank you so much for your intervention, as always. A brilliant one there. And Mr. Mukhtar Mohammed, enjoy the rest of your day.
Thank you for having me, too. Thank you.